Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Now, another one with which we find interesting is the Canadian dollar, CDD. The Canadian dollar is actually one to where this is actually a U.S. dollar-based underlying, meaning that if you are bullish on the U.S. dollar versus the Canadian loonie, which, by the way, that's always my favorite name for a currency, so to speak, this is one with which you would actually buy a call option if you think the U.S. dollar is going to do well against the Canadian dollar. But as you can see recently, the U.S. dollar has been falling versus the Canadian dollar. Now, I think with the Canadian dollar, this is always one of my favorite stories that I think you probably remember, Steve, when we were up in Canada a couple of years ago. As a promotion, the ISE at their booth, Steve was giving out U.S. dollar bills. And with it, all the flack that he took, people saying, oh, you want those dollars? I don't even want one of those. And so just all the flack that he took because the dollar was just so weak at the time versus the yen. Now, granted.
Yeah, remember that, Mike.
Oh, that was something else. I remember
we should have used that as a contrarian, right, Mike? Because nobody wanted that stuff then.
Oh, right. It was unbelievable. And I remember there was actually commercials saying, buy a Canadian Cadillac because of the strength of the Canadian dollar. I've never seen a Cadillac commercial based upon a currency. So with that right now, that's pretty much, those are some of the things with which we're looking at. The way with which we typically like to trade things, we're usually fans of spreads. Now, is that always the right way to go with everything? No. With AUM, for example, bring this up. Let's say that we were looking to go out to December of 2010. Right now we have AUM at 86.56. One thing with which we could do, we could perhaps buy the 86 call options, or let's even buy the 87 call options, $3. Now, $3, that might seem like a lot of money. So with that, we can limit risk by by selling the 90 call option against it. So it's one to where you're risking $1.50 for the potential to make $2.50. The beauty of options, if I were to buy a call and sell a call, that's going to cost me $250, or the trade with which I just made, or I'm sorry, $150. Not 150 points, not $150 per share or anything like that. Literally $150, not including commissions, when doing a trade as such. So you can do this with a smaller amount of money if you have an opinion on it. If you're really concerned with the overall risk of this, and let's say that you want to have exposure to an overseas currency for the longer term, such as the Aussie dollar, New Zealand, the Canadian loonie, whatever the case may be, you can take the chunk that you were going to invest in an overseas stock, an overseas bond, whatever the case may be, and put it in a money market. And then if you want that exposure still, you can buy an option. Personally, that's my preference as opposed to buying overseas securities just because I know what I'm getting. If I want to get the exposure of an overseas currency, I'd prefer to just put money in money markets and use the options instead. Now, is that right for everybody? No. Everybody's different. I'd never make any specific recommendations in anyone's portfolio ever without knowing the client fully, but that's typically something with which I like to look at. So on that note, I'm actually, if we have any questions, Steve, I'll turn it back over to you, and we can proceed with the Q&A.
Mike, great. And I like your last point. Obviously, there's never a strategy that is right for everybody, but options do give investors the ability to look at make a certain forecast with limited risk. So if you like the euro at the beginning of the year, much better off in EUU calls rather than the European bonds that have absolutely collapsed. So like you said, so you might be able to play it different ways, but the options give you the ability to have limited risk. Now, when you get into a market where volatility contracts significantly, that, of course, you might think that it's so easy to sell options and just collect the money. That you have to be careful of also. And we did go through a period, Mike, right, for about, 14, 15 months where volatility dropped just about every month.
That's what it seemed, yeah.
It's amazing. Let's just take some questions here. Got a question, can I trade the options of currency in a 401k? And the answer is probably yes, right, Mike, depending on your broker?
Yeah, it depends on how you have your 401k set up. It would have to be a very liberal 401k. You'd need to know what the terms and conditions are of the 401k. If it's a brokerage account that allows options for a 401k, then yes. Most companies don't, but if you're lucky enough to be at a very progressive company that does, then yes, you can.
Thank you. David has a point. He says, I guess his point is that he likes out-of-the-money options. And then he says, the second point, says, with deltas of at least 30. Do you have any general rules on that, Mike?
Well, we do. It's just for like the strategies with which we like to use. I'm a fan of like if we have an opinion that we're bullish or bearish, a wise man once told me about the importance and the benefits of using spreads very frequently. This wise man also said that he's traded in the markets for less than 30 years. That's what his tagline always was. So, yeah, the wise.
I don't know who that would be.
Yeah, unfortunately, he's also a Jets fan, but no one's perfect, right?
Yeah, right.
So
it sounds like an EP.
Yeah. So with that, if I have an opinion, bullish or bearish, the first thing that I usually look at is just buying a spread, meaning buying an at-the-money call, selling an out-of-the-money call. If I'm uberly bullish on something, then I'd probably just buy an out-of-the-money call or an out-of-the-money put with a smaller amount of money, but typically I usually tend to go with the spread. If it's something where volatility is just so extremely low and I'm not getting any premium for the option I'm selling, I'm fine buying an option, just making that the case. So different situations call for different things. Usually if it's a lower volatility environment, and once again, only you, the trader, can determine what is low and what is high, then I would just probably buy an option. If I feel it's a higher volatility environment, then I would tend to look at the spread.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.